Good afternoon, everybody, and welcome to our Yahoo Live. Oh, yeah.
No.
YouTube. My YouTube live stream. Sorry about being late, by the way. A couple of other things in the background prior to us getting started prevented us from starting on time. Joey's trying to throw me under the bus, but it's okay. I am here. There it is. Badger. Tom says, come on, Joey, hit the accelerator. So, again, apologize for being a little late today. And I'll make up for it. Thank you for being here. If you can hear me, by all means, please respond in the affirmative. Let me know that you're here. I saw a lot of typing coming in before we came on board. So, again, it's going to be all well worth it. My stories are going to be a little jumbled a little bit. Didn't have the time to put them all together, but they're going to still come out the way that they need to, all right? They're still going to come out the way that they need to. So my name is Glenn Tompkins, Senior Instructor here at VectorVest. My pleasure to be here. Glad that you're here. Glad that you're supporting the YouTube channel as we're trying to grow our footprint in this social media spot. You guys are going to be ideal in helping to grow it. Excuse me, that's the bad thing about live stuff. When you see the videos come out about these streams, comment on them. Still looking for your comments. Comment on them. Let me know what you think about them. Also, let me know if there's anything in specific that you want to talk about going forward, any specific stocks, that kind of thing. We will do that. You guys have a voice, use it. You guys have a voice, use it. And I know that that's Brian if he's talking about Go Patriots, and that's fine. Doesn't matter. I'm not talking to you right now. So, Paul is here, Rusty, Jake, Joff. Glad that you're here. Glad that you're all supporting it. So, you know what we're going to do? We're going to jump right into Trending Thursday. For those of you who are new to Trending Thursday, what is it all about? It is all about looking at stocks that are hitting the news wire in regards to a good way, to a bad way, missing earnings, hitting earnings, a seasonal thing, sort of like on the holiday season. Happy Halloween to everybody, by the way. Today is October 31st. Woo! All right, that's all the Halloween I got in me. All right, unless you're going to send me some candy. All right, you can always do that. Just let it know. Come to VectorVest, attention Glenn, send me candy. And that's all the Halloween that I got. Rule number one for growing the audience, be on time. I hear you. This is the first time we've ever been late like this, so I'm going to take it for all it's worth. I appreciate the feedback. And, you know, normally we are here. Today was an exception to that scenario. All right. First thing that we always do when we get into looking at what's going on trending-wise, I know I shouldn't do candy, Joff, is we're going to always start off with what's going on in the market. So we all know that yesterday, news-wise, the Fed dropped the interest rates by another 0.25%, okay? And that was good for the market. Everybody's happy about it. I think that the cut was baked into the market, but nonetheless, the investors within the market were very happy with it, drove the market up higher yesterday. Now, let's go into what's going on today. What's going on today, let me go down here. Hold on. There's my mouse. There it is. Let me pull up the market. Let me pull up the homepage here as well. You'll notice that all of our major indices are down today. Today, the market is taking a breather after the Fed did cut the rates yesterday. The Dow is down 226 points, down about 0.8%. That's what's leading the charge to the downside today. The NASDAQ down about 0.5%. The S&P 500 down 0.6%. So is the VectorVest Composite. For those of you who are new, the VectorVest Composite is an indexed arithmetic average of all of the stocks that we track. And currently, we're tracking 8,270 stocks. The average price of all of those stocks today right now is trading at $47.97. Now, we take that price and we track it on both a week-over-week and day-over-day basis on the color guard right here. The color guard tracks 3 of our market timing indicators, and when looking at the overall market situation, use the color guard like you would a traffic light. The main color you see mostly is yellow, also by way with the green. Man, Joey, you making all of my gray pop up on the screen. Holy smokes, I look super old. Sigh. Anyway, the price of the VectorVest composite is the price movement of that indexed arithmetic average. RT looks at relative timing, which is the short-term price trend of the market. This tells me if the market is in an uptrend or not. And the buy to sell ratio, which looks at the overall health of the market. Currently, it's above the value of 1, and that's because currently we still have more buy recommendations in the software than sells. So the market is still showing signs of strength, but notice how the buy to sell ratio is falling over the last week over week and day over day basis. So the market is still showing signs of strength, but it's dwindling. RT today is at red. Why? Because the indicator has fallen on a week over week and day over day basis and below the value of 1. So the short-term trend of the market is giving us a red signal right now. The price composite is at yellow because the price is risen on a week-over-week basis and fallen on a day-over-day basis. The data is mixed, so we assign a yellow tile. A lot more, not a lot, but more yellow in the color guard than green. The market is saying slow down right now. Slow down. Good afternoon, Alessandra. Saying slow down, all right? So based on that information, what's pushing the market to be this way? Well, let's do one other thing before we do that. Let's go over to the market timing graph and let's take a better look. So the Fed talked yesterday. This is looking at that VectorVest composite now shown in candlesticks over the last year. We can clearly see when the market's trending higher. Let me move this over a little bit. When the market's trending higher, when the market's trending lower, and when the market is moving sideways. I'm going to put this on a 3-month graph. Here's yesterday's candle. Yesterday's candle up day, but it did come back off of its session lows. The market was moving down earlier in the day. When the Fed came on about 2 o'clock, it dipped just a little bit more. And after about 2:30, when the Fed got on and started talking during his conference, the market started really moving higher. Very little wick at the top, strong up day by way of candle, but it did show some volatility coming off of the session lows. This candlestick pattern right here is known as a hanging man, and it is a possible reversal pattern, which comes to fruition today with follow through. So the market is taking a little bit of a breather, but if we look, coming off of this low of 10/8 of 2019, the market is definitely trending higher. We're looking at 2 moving averages, which are the 3 and the 8 exponential moving averages. And even with today's down day, the moving averages are still bullish. They have not pulled bearish yet, but is a decent down day as we saw on the home page. Now, looking at the home page, looking at the market timing graph, let's get into some news of why the market is moving the way that it is. I'm going to go into the news. Let's start off with the consumer confidence unexpectedly falls, hitting a 7-month low, and that was a couple of days ago. The consumer confidence of 125 versus 128 and 126 in September. The present situation, index at 172 versus 170. And revised from 169. The present situation index improved, but expectations weakened slightly as consumers expressed some concerns about business conditions and job prospects. So taking that in consideration with what the Fed did yesterday in lowering the interest rates, we're getting a feel that the market might be, our market is still the best globally, or one of the best globally. If you look globally, many of the markets that are in the global market are getting very close to recessionary terms. Ours, in this particular case, is not. And my personal feeling is you lower the interest rates to boost the economy. All right, but right now, the economy is still doing good, but we're still lowering rates. And listening to Jay Powell yesterday was saying a lot of it has to do, or some of it has to do with the China-U.S. trade, how what's the word I'm looking for? Not sketchy, but not inconsistent, but good word, the one I want to use. Well, they're unsure. How about that? That's probably the best terminology that I can use for lack of a better word. there's still some uncertainty about how this will roll out and when it will roll out. And taking that into consideration, that's affecting the market and so the consumer confidence going along with the Fed decision to lower rates is what's going on. So tell you what I'm going to do. And I haven't already done this, so you get to see how to make this happen. I'm going to go back into the software. I'm going to go to the Viewers tab. And what I normally do is I normally create a watch list prior to Trending Thursday. So I'm going to build it for you as I would normally do it now. So I'm in my folder for Trending Thursday. Here's all of the stocks or watch lists that I've created since we started doing Trending Thursday, okay? I'm going to click on New, and I'm going to click on and make a new watch list. Move this over. My new watch list will be called Trending Thursday. Dang it, Joey. Stop messing with my keyboard. Thursday. By the way, say hi, Joey. Joey's my supervisor. Not my supervisor. You're not my supervisor. No, you're not. He's my what are you? You're my coworker. You're not me. he's my director. You're not my manager. He's my producer. Trending Thursday. And today's date, 10/31/19. All right. So now, normally what we always start off with is what's going on in the market. So we're going to look at two indicators. I'm going to add them to the watch list, the VVC and the SPX. Or I could do the spiders. I'll do the spiders today. All right, so these are the two things that people look at to see what's going on in the market. We're going to look at the VectorVest composite because remember, the VectorVest composite tracks the movement of over 8,200 stocks. And currently right now, everything is down on it. The RV, which is the short-term, which is the long-term price appreciation potential of the stock is below the value of 1. The safety of the VectorVest composite below the value of 1, and the relative timing of the short-term price trend of the VectorVest composite below 1. But on the other hand, the spiders, because it's an ETF, the RV and the RS will always equal 1. But the spiders does have an RT above the value of 1, which tells me that the S&P 500 right now is still in an uptrend right now. All right, CI shows me that the spiders goes up more than it goes down compared to the VectorVest composite. And the earnings of the VectorVest composite sitting at $1.20, growing in their earnings on the basket of 8,200 stocks at a rate of 4% a year. On the spiders, we don't have that information because it is an index. All right, let's take a look at the graphs of these two. And the spiders is currently still moving higher, a down day today. Put this on a 3-month graph, a down day today. But overall, look at the move of the S&P 500 moving up above the 20-day exponential moving average as a good sign from a swing trade perspective on the S&P 500. Big down day today though, but still above the 20-day. 1 day does not make a trend. 1 day does not make a trend. Let's go look at the VectorVest composite. Also above the 20-day exponential moving average. Down day. Earnings on the VectorVest composite definitely running higher. Volume pretty steady day over day. But that's how we look in regards to the news with the consumer confidence, along with the Fed dropping the rate. Interesting that with that, today is just looking like a breather day, but we do have that hammer formation on the VectorVest composite. We don't have a full bona fide hammer here on the S&P, a little wick at the top, but still could be a possible reversal on both the S&P as well as the VectorVest composite. All right, let's see what you're chatting in. Years ago, I had an assistant who one time asked me how I always managed to mess up everything he did. I guess I was his Joey. Wow. Way to go. Joey's not a happy person today. He's just not happy. That's all right. But I'm going to make you happy, right, Joey? Happy, happy, joy, joy.
Candy?
Yeah, I got some candy. Here. There you go. Happy Halloween. You're supposed to run around and go trick or treat. Happy Halloween to you, Joey. No, don't. You can take my apple. That's good. Now you don't want to take it because it's healthy, right? All right. So, wow, you want to take it from me. All right, I'm going to close the graphs. Let's move on to the next story. The next story I'm going to talk about is still dealing with Boeing. Let's go to Boeing. Now, as you know, Boeing's CEO was in Washington this weekend, and the Washington panel of senators or House members were grilling him big time. Ted Cruz, was it Ted Cruz? I think it was Ted Cruz said, you're the CEO of the company and the buck stops here. So the CEO does apologize, but he declines to say if he'll resign. Notice that someone already did take the fall. The CEO, not the CEO, the president of the company, and I do not recall his name, did get fired. All right? And the CEO was actually moved off of the head of the board of directors. He's still on the board, but he's no longer the head of the board. And I think a lot of people are saying that he's not taking enough accountability as being at the head of the helm why those two planes crashed and killed as many people as it did. So, what he said in this story, we are sorry deeply and truly. CEO Dennis Muhlenberg tells families of those killed in the 737 MAX crashes in his opening statement before the Senate, not the House, but the Senate Commerce Committee. And it was interesting that the judge allowed those people with the deceased family members to sit in the court with those pictures of the deceased family members, which I think had to be heartbreaking, excuse me, for the CEO to have to sit there, listen to the grilling, and see those pictures sitting behind him. So, not that I condone it, and there are repercussions to your actions. And if you read the story, there's talking about possibly he knew about the defects in the plane prior to the planes going up and that they still crashed. And he walked into the committee through software upgrades to limit he walked through the software updates to limit the authority of the MCAS stall prevention system that has been linked to both crashes, as well as changes to improve safety oversight and transparency inside the company. So he looked at a lot of different things. He's saying, listen, we're going through the process of fixing it. And I think the Senate is still saying, I don't know if you're doing enough. Now, this is going to affect what they feel should be happening with the planes getting off of being grounded by December. I'm not sure that he's going to get his wish. And that could definitely hurt Boeing even more. Even more. So it was testimony over what happened. The Senate really got after him. And, I'm thinking that the company might actually put some pressure on him to resign. That's just a personal opinion. All right, so let's take this. Let's go look at the stock in the software. Let's get back into the VectorVest software. Let's add that. So we'll go to the same watch list that I'm in. All right, we'll add in Boeing, and I'm going to also add in some of the other stocks that are in that industry, like Lockheed Martin, like, who else? Oh, dagnabbit. Actually, I'll find out in a second. Lockheed Martin, Boeing. Who's the other people that I'm looking for? Dagnabbit. It is in the aerospace. So I'm going to go to the industries. Let's go to the viewers. Let's go to the industry viewer. Stock viewer. Oops. Watch this viewer. Let's go to industry viewer. And I'm going to go to aerospace and defense. It's not here. Let me sort this by industry. So what I'm also doing, by way of not having this all already set up, I'm showing you how to go and locate a specific industry. I'm sorting it alphabetical. There it is, aerospace and defense. If I double click on that, and move this over. If I double click on that, we'll also, whoops, is that what I'm looking for? Stocks in aerospace and defense. How many stocks? 6. Hold on. Aerospace and defense OEM. Let's go look at that. And that is where I should find Bombardier is in there. Hold on, let's try this one more time. Manufacturers. Say again? NOC. Yeah, Northrop Grumman is in there. That's one of them. There we go. So I'm going to look at 3 of the biggest ones. Boeing, Lockheed, and Northrop. All right, and I want to look at Airbus too. I'm going to take these four. 1, 2, 3, 4. I'm going to add them to my watch list. Add to watch list, and I'm going to put that into my trending Thursday, 1031. So again, I'm walking you through the process of what I normally do as a means so that you can get to the habit of doing it as well. I am going to close that. Let's go back to my watch list, and there they are. Ta-da! All right, so the story was on, the story was on Boeing, but I'm looking at other stocks within that industry. Interesting. Why does that not want to make this do right? Oh, I know why. There we go. So let's go look at Northrop, Lockheed, Boeing, and Airbus. I got a story about Airbus as well. I got a little bit of story about Airbus as well. Look at it on a day like today, all of these stocks are going down. All right, notice that Northrop Grumman, undervalued. Value means what we feel the stock is currently worth. And we get an easy way of trying to find if the stock is under or over its value. It is not a profit target. We look at earnings and earnings growth rate as a part of looking at value to determine what a stock is currently worth, what we feel it's worth. Lockheed Martin, trading under its value. It's trading at 376 with a value of 501. Boeing, still trading under its value at a price of 341, value of 420. And Airbus trading at $35 versus $37, slightly undervalued. We're going to call that fairly valued. Airbus did pick up a big contract, and we'll talk about that in a second. RV, the stock's long-term price appreciation potential as compared to an alternative investment is AAA corporate bond. This is going to help us to answer the question, would we rather hold the bond, that AAA corporate bond, over the next 1 to 3 years, or this stock? Above the value of 1, these indicators, RV, RS, RT, VST, and CI, are all cast on a scale between 0 and 2, where above 1 is favorable. So we make it simple. RV is above the value of 1 at 1.47. With RV, what we're saying is that this stock should outperform that AAA corporate bond by 47% over the next 1 to 3 years. That's telling long-term I'd like to hold that stock. Lockheed, same scenario. 1.51 should outperform that AAA corporate bond by 51% over the next 1 to 3 years. Boeing, we still, even with what's going on with Boeing, still has a high relative value at 1.38, whereas Airbus is at the bottom of the list by way of RV at 1.04, but still above the value of 1. Safety, the ability of the stock to consistently and predictably meet or exceed earnings expectations. It's also an indicator of risk for the stock. Northrop Grumman, 1.45, good safety. This tells me that when earnings comes out, this stock has a very high probability of meeting or exceeding earnings. Lockheed Martin, 1.35, also should have a high probability of meeting or exceeding earnings. Boeing, not nearly as high as safety as the other two, but still above the value of 1, and Airbus below the value of 1. This tells me when Airbus has earnings, it may not have nearly as high a probability to meet or exceed its earnings. And it's a little more riskier as a stock than the other 3. Relative timing tells me if the stock is in an uptrend or not. Notice that the only stock that's got an RT above 1 is Airbus, telling me that with that new contract that they are picking up, like I said, we're going to talk about in a second, the stock is picking up, moving up in price, where RT is now above the value of 1. The stock is currently in an uptrend, where the other 3, which have good fundamentals, right now may not be the right time to buy because the stock's RTs are below the value of 1. Now, the master indicator that we use for ranking stocks is the VST, which stands for value, safety, and timing, like relative value, relative safety, relative timing, all tied up into one indicator. Above the value of 1, the stock overall is a good stock. The higher above 1 it is, the higher the stock altogether is as far as value, safety, and timing. Why is the S&P value 1? Isn't RV in comparison to S&P and not the bond? No. RV looks at the stock's overall long-term price appreciation potential, which is compared to a bond. All right, so now on something like the S&P, it is an index. Because it's an index or an ETF, it's going to be hard to calculate RV and RS on an index. Thus the reason why RV and RS are at 1. And remember, RV looks at the long-term price appreciation potential, where relative safety looks at the stock's consistency and predictability of financial performance. When I'm looking at an ETF either looks at an index or a group of stocks. It's hard to put values of RV and RS on an ETF or an index. All right, so that is where it is. All right, just want to be able to put that out there. Only one of the stocks are buy, and that is Airbus, and that's because the stock is above its stop price, which is 32.60, trending away from its stop price. RT is above 1 and VST is above 1. That is the only stock that's got a buy recommendation out of these. Let's go look at their graphs, all right? As I look at the one-year graph with the 20-day exponential moving average, let's move it down a little bit. How about Northrop Grumman? Look at the one-year earnings on the graph. It is forecasted earnings, but look at it rock and roll. Put this on a 3-month graph. Now, earnings look great, but not the right time to be in the stock because the stock is doing what? Pulling back. Currently below the 20-day exponential moving average, but we understand the fundamentals behind the stock are good. Right now may not be the right time to be in the stock. I would prefer to see the stock with the rising earnings and above the 20-day exponential moving average. How about being able to manage the trade when the stock's price falls below? Good time to get out. When it goes back above, good time to be in. Let's go look at the next stock, which is Lockheed Martin. Same kind of scenario. So the stocks within the industry, you ever heard the statement, birds of a feather flock together? If the stocks within the industry are all looking alike, that's going to pull down the whole industry because birds of a feather flock together. But what I do like about LMT or Lockheed Martin, today it did rise above the 20-day exponential moving average, but with the downtrending day to day, it did pull further back below it. Keep in mind that the direction of the market affects 80% of the stocks in the market. Yesterday, the stock's price did bump above that 20-day exponential moving average, but today did not get followed through with that break above. Earnings is dropping off a little bit, but still higher than it was 3 months ago. Let's go to the next stock, which is Boeing. This is the stock that's in the news. With the hearing and everything going along with it, clearly below the 20-day exponential moving average. Recently, Boeing missed earnings, got hit, tried to do a rebound coming off of that hammer formation on candlestick. Right now, the stock is moving sideways, but still below the 20-day exponential moving average. Not the right time to get into it, and not the right time to short it yet either. I wouldn't think about shorting this stock until it breaks below that level of support as a means to show you that the stock was still moving down in price. Let me darken that line. Look at that intraday wick of a low, drawing that support line right there. Stock's price is moving sideways, as I mentioned, below the 20-day exponential, but I wouldn't think about shorting it just quite yet. I like, from a shorting perspective, that the stock is trending lower. But look at here. It moved sideways before it got hit. Look at what it's doing now, moving sideways. I want some more confirmation of more downward move if the stock is going to be shorted. Let's go to the next graph, which is Airbus. Look at that. This is the only one out of the group that is nicely above the 20-day exponential moving average, moving higher. Today is just a bad day to be in the stock. But you know what else I do like about it? That even though it's moving down, a lot of people are pushing it down. There's a lot of interest behind this as well. And what is that candlestick pattern? If you don't know, that's a candlestick pattern known as a bearish harami. A bearish harami, which could be a precursor to the stock having some more downside. All right, so those are the graphs that are looking at those 4 stocks. The story was on Boeing, but we looked at the other stocks that were in that industry as well. Let's see what's going on here. Please elaborate on RV. Let me break it down for you a different way. Let me right-click on the stock. Let's go to the full stock analysis report. Let me move that over. This is always a good way to get a better understanding of all of our indicators. RV is an indicator of long-term price appreciation potential. Those are the key words. The potential for the stock's price to go higher over the next 1 to 3 years. It's got an RV of 1.47, which is excellent on a scale between 0 and 2. This indicator is far superior to simple comparison of price and value because it is computed from an analysis of projected price appreciation 3 years out. So as I add that, saying that it's looking at the comparison to a AAA corporate bond, you know that when you buy a bond, after it matures, you get all your money back from the bond with a small interest. It is a safer investment that I'm pretty much guaranteed that I'm going to get my money back. Well, what if I'm in a stock as compared to that? Where would I rather have my money? In that safer bond that's going to pay me out that little interest, even though I know it's pretty much guaranteed that I'm going to get my money back, or in a stock that should have the higher probability of going or surpassing what the return will be on that AAA corporate bond. That is the purpose behind RV. So, Emonic, is that right? Emonic? Anyway, hopefully that makes sense. Does that make sense? I hope that it does. I hope that it will. Tony says, please include RTN Raytheon to this list. I'll do that real quickly. I know I'm behind the 8 ball. But, Tony, understand that in that industry, RTN, you can always add to your own watch list. Raytheon now goes up to the top of the list, undervalued, good relative value, good relative safety, good relative timing. Guess what? Now, next to Airbus, this is the only buy recommended stock. Good VST. It's got the best VST overall. They grow their earnings at a clip of about 18% a year, where Lockheed Martin grows their earnings at a clip of about 21% a year. So keep that in mind. Raytheon may not be a bad play. We'll do that real quick. Look at that graph. Sorry, Joey. It is above the 20-day moving average, put on a 3-month graph. Also, just like Airbus may, out of the other companies that are in this industry, this may not be a bad play. Today is a down day. Watch the volume. The volume on the stock is pulling back. Well, that makes sense while the stock's price is moving sideways, but clearly above the 20-day exponential moving average, and I love the rise in earnings. All right, so who asked me to put that on? Tony, there you go. There you go. So that actually is one of the better stocks within that industry as well. All right, let's go to our next story. The next story I'm going to do is just a follow-up. The next story that I'm going to do is just a follow-up to that stock Airbus that we added. Airbus pulls far ahead of Boeing in new orders after the Indigo deal. Airbus extends its lead over Boeing after booking one of its biggest jet orders ever for 300 aircraft valued at a list price of $33 billion and doubling its order book for the year. So that is why I had that stock in that list along with Boeing, because it looks like Airbus is right now, the way the Boeing is going, Airbus is going to pick up some orders over Boeing because of the grounding of the 737 MAX. So the two big airliners in this, you know, they're both in that industry, but the two big airliners that build the big planes are Airbus and Boeing. And right now, because Boeing is feeling the woes of being grounded, and Airbus is picking up some other orders. So there you go. Lawrence says they are merging with UTC. Are you talking about Airbus, Lawrence? So that I did not get a news story on, and I did not find that. But if you have that information, that could be, it definitely is very usable. All right, now let's go to the next story. The next story looks at the NCAA clearing a path for paid college athletes. This is super wow, because college, it's been said for the longest time that some of these college students should be able to get some money from the colleges, because the colleges make a lot of money on the paraphernalia with that student's jersey and things of that nature. And now the NCAA is coming down the path of getting those students paid. Now, you know what I don't like about that? Because if that's the case, who's going to get the money? The people that go to the bigger name schools. I think that this hurts the smaller colleges who don't get the TV time, who may not get the revenue on the really good students, or the revenue may not be nearly as high for those students in the smaller schools. So I'm looking at it a little differently as well. And then athletes should pay for their own college. Well, you know why there's scholarships and why they pay for these students to go to these schools? Is because they help these schools to win championships in their sports program. So from a sports perspective, that's why the scholarships are given. Just like you can give a student a scholarship from an academic standpoint, why not be able to give these students who may not be able to go to college, all right, because they can't afford to go to college, but they have a skill set that can be useful, and the school sees it and pays for their scholarships. That is the reason behind it. A lot of these kids that are in these schools getting their scholarships paid for won't be able to afford to go to that college. But they have a skill set from a sports perspective that the college sees, and they are willing to pay for that that student's tuition. So Alessandra, that is why if they can't afford to pay, then a lot of these kids wouldn't go to school. They couldn't go to school, which is why the NBA at one time did draft people out of high school. They did it twice. All right, they did it and they did it and then they stopped and they did it again. But that was the reason why these kids couldn't afford to go to school. And you know something? If you've given them an opportunity to make money on the God-given talent that they have, they were getting drafted out of high school. All right, so that's why they don't pay for their own college. But you know something? When you go and draft that kid and you pay for their tuition, and that kid really brings a lot of notoriety to the school, and the school is making a ton of money off of that notoriety, do you not feel that that student should be able to partake on what he is bringing to that school or she is bringing to that school? And it's not just in college basketball. I'm talking about in all college sports. Notice that says the NCAA, not college basketball. So no matter what NCAA organization, whether it's lacrosse, whether it's wrestling, whether it's baseball, whether it's basketball, all right? That's what this is all about, all right? So now you know who gets affected by this? How about Nike and Under Armour and Adidas? So let's go add those stocks, Nike, UAA, and Adidas. So that's the story. Let's see the stocks that are affected by it. Let's go put in NKE, comma, Under Armour. Under Armour is UA. And what was the another one? Adidas. ADDYY. Ooh, ADDYY. Let's peep those out real quick. So these are because these are the people that give sneaker deals to a lot of these students, right? So let's go look at Nike, let's go look at Adidas, and let's go look at Under Armour. Nike, over its value, it's trading at 89, value at 69. Doesn't make it a bad stock, just means that people are willing to pay a premium to own the stock. Adidas, same scenario, even more overvalued. People are willing to pay a premium to own the stock. The stock is really valued at $78. And Under Armour, notice that all three of these stocks are over their value. So because there's a lot of money that's being made in sneaker deals and all of that kind of stuff, people are investing in these stocks, and in order to do so, they're willing to pay a premium. Relative value, the stock's long-term upside potential on Nike is at 1.16. This should outperform a AAA corporate bond by 16% over the next 1 to 3 years. Adidas and Under Armour don't have that same luxury. These stocks will underperform a AAA corporate bond over the next 1 to 3 years. So long term, I may not want to hold these stocks. Relative safety, above the value of 1.44 on Nike, this stock has a high probability of meeting or exceeding earnings expectations quarter over quarter, year over year, whereas Adidas does as well. It is above 1. Under Armour not so much. All right, so I'm looking at the fundamentals on Under Armour, not nearly as good as what we have with Nike. Nike overall is the overall leader in this field by way of our, oh, not really. If I'm looking at the, yes, I am. There we go, by VST. The overall ranking of the stock, VST, Nike is the leader out of all three of these. This is a stock that has a higher VST compared to Adidas and Under Armour. None of them are buy recommendations right now. How about Adidas? They have positive earnings, but something's going on in the company. They're growing their earnings at a negative clip. Whereas Under Armour, even though the fundamentals are not there, they're making money. They are making money, and with Nike, they are also making money, growing their earnings at a clip of 13% a year. Let's right-click, view with the stock graphs. Nike nicely was moving higher, put it on a 3-month graph. Nicely was moving higher, currently below the 20-day exponential for 1, 2, 3, 4, 5, 6, 7 straight days. We had a little bit of a rebound yesterday, but more follow through to the downside right now. So Nike overall good stock, not the right time to be in it. Love the earnings per share, and the volume is pretty steady, but currently not the right time to be in Nike. I'd really like to see it above that 20-day, and look at that. When it's above it, even when it pulls back but stays above it, it keeps you in that stock with the higher probability that it will continue to rise. Currently below, I'm not saying that it's the right time to get into the stock, but it's a good overall stock. Wait for your opportunity. Let the trade come to you. Let's go to Adidas. Man, a lot flatter. Not really super duperly moving higher. It's been a hold recommendation for all 3 months. Watch earnings. And the stock is currently above the 20-day exponential moving average, but pulling closer back towards it. Watch the volume. Volume is pulling back. Volume is conviction. If I'm watching a stock's price rise, I want to see rising volume as well. And the last stock in this group of stocks is Under Armour, sort of just like Adidas, doing a little bit of sideways move overall. But as these schools, or as the NCAA is going through this process, these stocks may be a big recipient of nice upward moves going forward. So these are stocks to definitely keep your eyes on. The only one that's got an R, none of them are above. Actually, Adidas is above the 20-day exponential moving average, but pulling back with the down day today. All right, let's see what comments you have. No, the school is giving a free education. He or she should be thankful. You know something? I don't think that you realize how many of these students are extremely thankful for getting these scholarships, knowing that this is the only way that they get to show off their talent and go to school. I don't know if you know that, but these kids are thankful to go to these schools. Badger says, is this interesting? Hit that like button. Oh, thank you for that, Tom. I appreciate that. Jake says, Harvard football program covers all the scholarship costs. Again, these schools are actively recruiting student athletes, so they're going to pay for them to go to school. It is what it is, and I think these kids are truly thankful for that. Saborium says, if a student athlete can get money from sponsorships, they should be required to pay back the school for their scholarship. Now, that I agree with too. So if the school is giving these students a free ride, if they can get money because of their namesake, I agree with you on that, Saborium. It should be counted as income, and that income, you know, is a way of saying, you know, I couldn't have gotten here without you, but now that I'm here and I'm making some money, I could pay back that loan that on that free ride. I'm with you full bore on that, Saborium, big time. I'm with you. All right, let's get into our next article. Let's get into AT&T. All right, so now we're going to get into, hold on, let me get it to pull up. That's interesting. Hold on a second. I can't. Now I can. All right, so let's do it this way. I'm going to go out to Seeking Alpha. I'm going to type in AT&T, just type in T. I'm going to find the story. All right, so this is what I do to find the story. Where is it? There we go. So there's the story. AT&T, this is the Stream Wars, folks. All right, this is the Stream Wars. This is another addition to the Stream Wars. AT&T, along with this in this deal here, AT&T is set to unveil HBO Max streaming service. So now we had Apple going to Roku to offer the Apple streaming on their platform. Disney and dang nabbit, who was with Disney? Who's doing the Disney? Oh, Disney is setting up their streaming service to go after Netflix. Netflix losing customers, but still rock and rolling, beating earnings, moving up higher. So everything is congealing within the stream wars, and AT&T is going after, everybody's going after the big boy, which is Netflix. The high-stakes streaming wars will light up again as AT&T unveils its answer to Netflix and Disney Plus at the Warner Media Day. So AT&T is trying to march with the big dogs. So AT&T, you remember that? You don't remember? Okay. AT&T is trying to march with the big dogs, and they're going with the HBO Max streaming service. Set for a spring launch, the HBO Max offering is targeting 80 million global subscribers by 2025. Man, everybody's trying to get a little piece of the streaming pie and get us to go to their service. How many of you actually have cable at home? I'm still one that does, but I'm seeing that more and more people are actually starting to cut the cable and they're going to these streaming services. I also have Fire Stick. I also have within my cable contract HBO. That was part of the deal to get me to go to the cable company I have, is to offer me free HBO. So streaming out there, man, is rocking and rolling. The stream wars definitely heating up. So tell you what we're going to do. AT&T is going to do the HBO Max. Let's go back into the software and let's look at some of the stocks that are in the streaming wars. Let's go to Netflix. Let's go to Disney. Let's go to Apple. Let's go to Verizon. Verizon was setting up with their services as well. Also getting Disney. And let's go out to AT&T. All right. And a lot of people, see, there you go. Paul says, I have cable and also Roku. I have cable along with Fire Stick. Let's go look at the stocks in the streaming wars. AT&T, Netflix, Disney, Verizon. So AT&T and Verizon are the phone services offering streaming services. All right, let's go peep them out. But will HBO Max offset losses due to DirecTV Now failure? I don't know. So I don't have an answer to that, but let me ask that again. Let me say that again. Will HBO Max offset losses due to DirecTV Now failure? I don't know, but I think that they're trying to. You know what else I noticed? And I've been watching, if you look at TV, did you notice that Disney is doing a lot more commercials for their Disney Plus that's getting ready to come out? They put a lot of money behind promoting their Disney product. So I'm sure that a lot of the money they have sitting in the coffers was pulled out to go after advertising. But if you look at TV as much as I do, Disney Plus has been really going after it, advertising on TV. All right, Lawrence also has Roku as well. All right, AT&T, under its value, $38, value $41. Netflix, over its value, which means that people are willing to pay a premium to own Netflix. Disney, over its value. People are willing to pay a premium to own Disney. Let me talk to you something else about Disney. That whole Disney Plus that's coming out, Disney has got the most diverse catalog of entertainment than all of these put together. Now, Netflix has been on the coattails of a lot of good content, but Disney has got some old school content that people can have access to. You're looking at all of the Disney stuff, all of the Pixar stuff, all of the Star Wars stuff is going to be included with Disney. Disney has got the biggest portfolio of content out of all of this. So keep that in mind. And AT&T and again, the Verizon, the phone services, as part of coming to their phone services, are offering some streaming services. So like I said, the war is heating up. Now, as far as being over or undervalued, Verizon has got the closest value of being fairly valued. Very interesting. Upside potential, AT&T, 1.16. It should outperform the AAA corporate bond by 16%. Netflix should outperform by 15%. Disney, with all of the money that they're putting out there, to go after Netflix, it's going to take a toll on them. Long term, I don't know right now if you would want to hold Disney for the long term yet. Not yet. And on Verizon, it should outperform the AAA corporate bond by 3%. Safety, AT&T, most likely will meet or exceed earnings, but not high probability. The one that's got the highest probability by way of relative safety is Disney at 1.38. Again, this is a company that's been around for the long term, for the long haul. Right now, with all of the money they're putting in with the relative value, long term, they don't look nearly as good, but that should come around. And then last but not least, Verizon with a relative safety at 1.02. It is above 1, but Now, which ones of these stocks are moving up the most? AT&T. This stock is moving up higher because the RT is above the value of 1. RT tells me that AT&T is in an uptrend. Netflix, though, fundamentals are good, but the stock is in a downtrend very slightly. Disney, again, with that relative value, also with the stock being in a downtrend, this is going to be one of those that you're going to have to wait on. Not only that, look at this. Let me move over. They have positive earnings, but they're growing their earnings in a negative fashion. That's a lot of money that they're using for advertising, which is affecting the bottom line. All right, so just keep that in mind. Verizon has an RT about at 1.03. It's not gangbusters in an uptrend, but overall, with above the value of 1, it is in an uptrend. And notice that AT&T is the only buy recommendation in here. Fundamentally sound and moving up. Fundamentally sound on Netflix, but not moving up. Half fundamentally sound. It's not the upside on the long term on Disney, and not moving up. And Verizon fundamentally okay because both indexes, the RV and RS, are both above 1 and RT is rising. All right, let's go look at their graphs. All right, let's right click, look at the graphs. Let's look at AT&T first. Put this on a 3-month graph. Stock is moving higher, begrudgingly, but moving higher. Definitely a higher range, higher highs and higher lows. Stock is above the 20-day moving average, but right now, last 4 days, moving sideways. And even on a down day like today, AT&T is one of those shining stars that is moving up on a down day today. Watch the volume. Volume is falling because the stock is moving sideways. That makes sense. Love the earnings on AT&T, but look at that equity curve. I'm going to draw a freehand line connecting. Look at that equity curve. Nice 45-degree angle. Let's make that a little darker. Love that equity curve. Most of the time spending above the value of the 20-day exponential. Beautiful equity curve. That's AT&T. Netflix, not as good. All right, trying to get some life in it. Bounces above the 20-day, falls below. Bounces above the 20-day, down day today. Netflix is feeling the hurt today. Rising earnings, though. Rising earnings. The stock needs to get out of its own way. Wait for the right buying opportunity. Let's move over to Disney. Same kind of scenario as you're looking at with Netflix. These two are really going after it head-to-head. They're putting a lot of money into trying to get the customers. This is going to take some time before you wait to get a better buying opportunity, but look at the earnings per share. Definitely falling. Be careful with it. And the last stock, which is Verizon, looks a lot like AT&T, right? Both of these phone companies are moving higher as they add on streaming services to get you to come to their phone services. Down day to day because the market is down, but still above the 20-day exponential moving average. All right, let's see what you got to say about this. Also, Disney has prohibited competitors' ads on their cable and broadcast channels. Saborium, I did talk about that last week in the Trending Thursdays, that they're really going after Netflix, not allowing Netflix to advertise on their channels. Paul says Disney also has Marvel. Disney has got a wonderful portfolio of content. And I think that that's overall going to push them higher, even though right now they may not look so good. But once they get that Disney Plus and people flock to it, we'll see what happens. Will people flock to it? We don't know yet. As they release it, you wait till next year when they start to look at their first quarter of earnings. Man, I think that they will be pleasantly surprised. I really do. And I think Netflix is going to feel the hurt losing more customers. Notice that Netflix has been, and I'm part of that. Netflix has even bumped up their rates to keep up. All right, they're losing money, but they bumped up their rates to keep up. And the diehard Netflixers like me, are you a diehard Netflixer, Joey?
I've had Netflix since pretty much it came out.
Yeah, see, Joey and I are both in the same boat. I've had Netflix and Hulu ever since it came out, and even though they raised the price, it is what it is. I'm going to keep my Netflix. Jake has Xfinity, and he loves it. And Jake says, I get Netflix for free with Xfinity Comcast. And that's how Comcast, just like with me, I got Spectrum now. Spectrum offered me free HBO. These cable companies are going to offer you something to come to them. All right. My last segment for the day. Why did I do it that way? My last segment for the day is earnings plays. Enphase. Enphase on story. And something, I don't have the answer with Enphase. I don't have the answer with Enphase. Let me write this down real quick. I don't have the answer with Enphase, but Enphase did great. They beat earnings, they beat revenue, and the stock got smoked. All right, this company continues to make money, but it got beat. So that was my first earnings story that I'm going to talk about. Mattel, which is MAT. Mattel trades higher after sailing past quarter three estimates. Now, why is that important? Well, Mattel and things like Walmart and Amazon, all of these are getting ready for the Christmas season, the holiday season. Toy sales might be going up. Mattel blew it out the water. So maybe this is a precursor to possibly higher dollar sales or more money being made because of the toys companies, all right? So Mattel did good. Doll sales were up 5% during the quarter. If they were up now prior to the Christmas season, think about it. Maybe the trend is turning so that maybe leaving a lot more dolls, record number of dolls could be sold. And again, I'm just going out on a limb by saying that. Another company that beat out earnings, Electronic Arts, EA Sports. It's in the game. You got to say that, right? All right, Electronic Arts beats earnings and net bookings of 1.28%. They beat revenue. Shares jumped up 4%. That was on the 29th. So that was just a couple of stocks that met or exceeded earnings. I'm going to add a couple of more. So this is the earnings side of the presentation of stocks that either hit or missed earnings. I'm going to go back to my watch list. All right, let's go add these stocks. So what reported ENPH, Mattel, we looked at, EA Sports, Electronic Arts. Now, I'm going to add in some earnings that hit yesterday. All right, Starbucks hit earnings. Altria, which is MO, hit earnings. Facebook hit earnings. And Apple hit earnings. All right, so I'm going to add those. So this is the earnings segment of Trending Thursday. Let's go look at them. Facebook hit earnings. Apple hit earnings. EA, ENPH, who else did I say? Altria, I think that was it. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And what am I missing? Mattel. I didn't, oh, there it is, Mattel. There we go, boom. So let's take a look at these stocks. That's not Raytheon, I don't want that one. Apple, trading just a little bit higher than its value, a little bit overvalued. All right, people are willing to pay a premium to own Apple. EA Sports, it's in the game, under its value, trading at 95, value at 127. ENPH, under its value, but the stock is just getting pummeled. We'll talk about that in a second. Altria, beat earnings. fairly valued. Stock is trading at 44.80, 44.80. The value is at 43.01, fairly valued. Mattel, even though it did so well, beat earnings, the stock is considered to be overvalued. We have it valued at $2.33. All right, RV on the stock. Apple, below 1. Man, as much as I love Apple's long term, the stock may not be a stock that you want to hold on to long term because of the RV below the value of 1. EA Sports, nicely high, long term, like holding that stock for the long term with RV above 1. Same thing with ENPH. This stock is a solid stock that just gets hammered because of something happening. One, it got downgraded by somebody, which I don't think they knew what they were talking about really. A famous person in the market talked on TV about selling it and the stock got killed. And then more recently, in the most recent earnings, there was a Robinhood conference and they said something about shorting it and then the stock got hit, even though on the day that it met earnings, it beat earnings and revenues, it still got hit. All right, Altria, fairly valued, and Mattel, overvalued. All right, we're looking at relative value. Altria, above 1, it should outperform a AAA corporate bond, but not by a lot. And long term, Mattel, I'm not sure I want to hold. Safety, Apple's got a high probability of meeting or exceeding earnings, so is Electronic Arts. ENPH, even with what's going on with the stock getting beaten up, its relative safety rating is dropped. All right, is it still most likely to beat or exceed earnings? The answer to that is yes, because it's above 1, but definitely is taking a hit. Altria, right at 1, and Mattel, it beat earnings yesterday, but look at that relative safety tells me most likely it doesn't have a high expectation to do that. Excuse me, I apologize for that. Let's go take a look at their graphs. One of these are a sell, one of these are a buy. Another thing about Enphase, this stock grows its earnings better than all these other stocks. 43% it grows its earnings by. As much as I love Apple, they're growing their earnings at 0%. Apple is still altogether a good stock, but they're not growing their earnings. A lot of people say it's lack of innovation from the phones. All right, you have an iPhone? Way to go, high five. There you go. All right, how many of you have iPhones? How many of you got phones on the dark side? Have, what are they?
Droid.
Yeah, the Droid phones. I'm just curious to know how many of you got them. All right, let's look at these graphs real quick. Where's my mouse? There it is. Let's go look at these graphs real quick. View the stock graph. All right, we'll look at Apple, 3 months. Love the equity curve, watch the earnings. Earnings is the engine that drives the stock's price higher, okay? But look at that equity curve. Equity curve looks really good. Look at today's activity down day. How about it had some downward pressure today? Look at the long wick at the bottom of the candle. Where did it stop? Say it, Tom. Type it in the room. I'm not going to say it. You say it. Where did that wick stop today? It stopped right at that level of the 20-day exponential moving average. All right? So Tom is going to type in the room what I always say about looking at things like this. I'm waiting, Tom. Oh my gosh, Tom, you are typing so slow. Sigh. This stuff really works. That's what I'm going to say. This stuff really works. This is why we look at this stuff. All right? There you go. Barry put it in there for me already. This stuff really works, and it does. That's why we look at these stocks the way we do on the graphs. Let's go to the next one. EA Sports, a little bit of a sideways move right now, back and forth above the 20-day exponential moving average. The earnings is higher than it was 3 months ago, and people are getting into the stock. Look at the rising volume, but the stock is moving sideways. Currently above, down day to day in the market, down day to day in EA Sports. It's in the game. Let's go to ENPH. And again, man, ENPH is doing all of the things it's supposed to do right. It really, really is. Look at the stocks. Look at the earnings per share. Volume is pretty much steady. It's grown, but look at it's grown on the downward move. People are getting out of it. People are like, I don't know what's going on. I'm going to take my money off the table. All right, but ENPH is a good, solid company that's right now been subject just to some bad stuff. coming out of people's mouths. Really, it really, really is. All right, but look at that earnings. You can't beat that earnings. Let's go to the next stock, which is Altria. Also beat earnings, but look at that follow through. Look at that. Right at that level of the level of the 20-day exponential moving average. Look at the earnings per share. Growing. Really is. Down day to day. People probably taking profits. Look at that run up on the stock. That's probably a lot of profit taking on a down day in the market. Last one, Mattel. All right, bouncing back and forth. Over the last 3 months, though, did have negative earnings at some point. Did get back on the right track. Gapped up. Excuse me. Gapped up. Pulled back down today, but still above the 20-day exponential moving average. So those are all of my stories. Man, I got 21 stocks in my list today. Those are all of my stories. Let me see what you're typing in now. Could it be that this stuff really works? It does. And Jake or Brian, I ain't calling no names. You can see the names in there. Badger did say Roku, Netflix, Amazon Prime, cable, etc. What else do you do on a goat and chicken farm in the middle of nowhere? Sit and count the stars? You probably have a beautiful view of the stars in the middle of nowhere. You can probably see the Milky Way in the middle of nowhere. That is, if you've never seen the Milky Way sitting in the middle of a really, really dark place, it is one of the most breathtaking sights you can see just looking up in the sky. Looking at that Milky Way is, believe it or not, beautiful. But you have to be in a super dark space with no lights in the middle of like a woods or something like that, which I was afraid to do. I was in the mountains in North Carolina. I was really, really afraid to be in the middle of the woods all by myself, but I was. And I saw the Milky Way. It was amazing. All right. Now, what I'm going to do, I know I'm a little bit over, but what I'm going to do now is give you an opportunity to give me some of the stocks that you want me to take a look at. And we'll do that real quick. Again, we started late. It was all Joey's fault. We started late. It had nothing to do with Joey. It really, really didn't. All right. Put your stocks in. DECK, comma. I want to look at about no more than about 7 stocks if I can. Badger, it's beautiful up here, but anything night after night gets old. I hear you. I hear you. All right, you guys didn't come prepared with stocks you want me to look at today. And if that's the case, I'm only going to look at, I'll give you a little bit of time. I'm only going to look at the ones you want me to look at. All right. Dooby-dooby-doo. EURN. All right. Comma. Anything else? NSIT. There we go. SAIA. Comma. All right. Going once, Samsung. What is it? Samsung. I don't have it. Is somebody got to help me out with that? I don't have Samsung. IR, comma, USIS. Do I not carry that either? USIS, double check that stock for me. Double check that symbol. GOOG. I'm going to put L, comma,
Samsung is KRW.
AMK. What did you say?
Samsung is KRW.
KRW? I don't have that either. Nope, I don't have that stock. All right, I'm going to take one more. UIS. There we go. I'll take that one. All right, those are the stocks that I'm going to look at today. Check your email for 30 seconds while the delay catches up. All right, put these on Decker Outdoors. Put it on a 3-month graph. Chandra, I'm going to try and see if I can get that in. I am running a little over today. I'm going to see if I can get that one in. Decker Outdoors, pulled back. Look at that pullback within a 3-month graph. Look at that today. Just got back above the 20-day exponential moving average. Coming off the low, though, it is hitting higher lows. Almost hitting higher highs. I'd like to see it continue to go on with hitting higher highs. Love the earnings per share. Volume is pulling back, but that makes sense as the stock's moving a tad bit sideways. But a down day today, the stock is moving up. Open green candle, and above the 20-day exponential moving average. That may not be a bad trade, at least up to that level of resistance of 159.72. All right, that's the high for the 3 months. That now becomes a 3-month resistance level. You got some opportunity to make some money on that stock. EURN, transportation ship, The shipping industry is taking a little breather. How about EURN is fading a little bit, topping out? All right, who gave me that? Who gave me EURN? That was, how come I can't see that? There it is, Bari. Be careful with that stock. It's moving sideways, down day to day, a little bit of a one black crow candlestick. I got a level of support right here. Oh, look at that. That's a nice little level of support it's creating. Look at that. All right, Bari, probably if you've got money in that stock, use that as a line in the sand to get out. That's probably a good line in the sand, a good level of support. Keep that in mind. All right, so that may not be a bad play. I do like the rising earnings, falling volume. Be careful with that as the stock is moving sideways. But that may be, that line at 1096 may be a good line in the sand. If it closes end of day below that, something happened over there. If that happens, did it cut me off? Did I break it again? I don't know. All right, let's go to the next stock. NSIT, can they see me? They can? Okay. NSIT, that, who gave me that? That is a beautiful Kartik. That is a beautiful looking equity curve. Now, you know something? You see how far it's pulling away from the 20-day exponential moving average? If you're going to use that as a way to get out, what could I do better to track the price closer? Somebody type it in the room. What could I do to track the price closer, not to give all of this back as a way of managing the stock? Anybody? Well, I'm going to answer the question for you. Why not use something like an 8 exponential moving average? All right, let's take that off. As an 8 exponential moving average, let's change the style, make that a little darker. Darker, oops, make it a little darker. That might be a great way to manage the trade. So that NSIT, Kartik, does that make sense as a better way to manage that trade? The 3 and the 8, I could throw the 3 and the 8 on, but how about just using the 8? How about just, look how beautiful the 8 works with that stock. So Kartik, that may not be a bad way to manage that trade, right? Down day to day, it didn't break below that 8, you're still okay. All right, let's go to the next stock. Woo! SIAA, you're welcome, my friend. Man, this was a hot stock, huh?
It's SAIA.
SAI, what did I say?
SIAA.
Why are you correcting me?
You were wrong. Yeah.
High five, I like that. Joey likes me a little bit. This was a hot stock and got smoked. I don't know if that was an earnings play. So now, guess what? You want to know how I can always tell if a stock is being affected by earnings? How about when I'm in the graph, I can pick up and look at the news. All right, it's down 4.23%. They hit by lower shipment weights, facility expansion, cost revenue stayed strong. Third quarter EPS hit by low. All right, so it sounds like they missed earnings. All right, sounds like they missed earnings, and that's why the stock's price fell. All right, that's why the stock's price fell. It is below the 20-day. If I owned it and that happened, that would be a good day to get out of the stock. Yes? That would be a good day to get out of the stock. But look at where it's stopping at. Right at this nice solid level of support at 89.58. But where is it at today? Below it. This stock, if it continues and stays below that level, it's got some downside. This stock definitely has downside. But earnings look good. They just had a blip in the earnings. All right, our earnings is forecasted. Forecasted earnings still looks good. Just had a blip in their most recent earnings. Let's see if the stock has the wherewithal to bounce. All right, let's look at the next one, IR. Ingersoll Rand, I like that it's above the 20-day. Earnings is rising. Volume is rising along with the stock. I like that. Right now, the stock is moving sideways, so volume is gonna fail off a little bit. Here it goes, same kind of scenario. Do I want to manage the trade all the way back? Oh, this is the 8. This is the 8. All right, leave that alone. Use that as a way to get out of the stock. Or the 3 and the 8 if you want to use the 3 and the 8. The 3 and the 8 still haven't crossed bearish right now as well. All right, or the 8 by itself. That's still a good stock. The stock is coming off of a 3-month high over the last couple of days. Down day in the market, down day in the stock. One day does not make a trend. Go to the next stock. Google L. Was doing nicely above the 8. Let's put that back on the 20. Was doing nicely even above the 20. Right now, the stock's price is pulling back from that 3-month high. Love that equity curve. 3-month high, pulling back, not the right time to be in the stock right now. The stock is still making money. Even though the stock makes money, look at price action. Price action is telling me still not the right time to be in the stock right now. All right, so keep that in mind. Go to the next graph. AMKR was looking nice. Small bars, though. It was moving up, small clips. Watch earnings. Earnings fell. Remember, earnings is the engine that drives the stock's price higher. How about earnings has been falling? What's the stock's price now doing? All right, 2 days, probably another earnings play. Click on news. Probably it is down 9%. Amacar well poised for a surge. Maybe not. Go to press release 4 hours ago. New strong buy. This may not be an earnings play, but it is moving down for 2 days in a row. Something has changed. Something has changed. It is above the 20. Let's go add on the 8. It's still above the 8. I would use the 8 if I'm in it right now as a means to get out of the stock, capture profit. Remember, folks, you can't go broke taking a profit. And let's go to the last stock, which is UIS. Definitely above the 8 exponential. Put it back on the 20. Nicely above the 20 as well. Moving higher. Open day today. Very little wick at the top. It's got some bullish tendencies. I like the gap up. It broke out of its own way as a level of resistance. And now I'm getting follow through today. Earnings looks good. Oh, yeah, we're in this in our jockey club today as well. I got into that a couple of days ago, and I'm holding it for the long term. This stock has got good upside to that high of sitting at, let me put that on, to the high sitting at $12.95. I got a couple, I almost got $3 or so that I can make on this trade. Moving up on a lower dollar stock, that may not be a bad play. The stock turned from a sell to a hold to a buy and started moving higher. All right, no, AMKR reported earnings Monday, 10/28. Thank you, Tom. All right, 8 exponential. So I'm looking at an 8-day moving average, but I'm using an exponential moving average, which tracks price a little closer than a simple average. Now, a weighted moving average tracks price even closer than an exponential. I like the exponential moving average because it's right in the middle of tracking price, so I can stay in the stock just long enough. All right, can you use the 10? You sure can if you want to. I can put on the 10 exponential, the 5 exponential, whatever you feel comfortable with. I use the 3 and the 8 and the 20, all exponential. All right, with that, folks, thank you for being patient with us as we were trying to get on. Man, we went through a lot today. Did you guys find any of this stuff helpful? Hopefully you did. Did you guys find any of this stuff helpful? Especially, how many people here are brand new? This is your first time to our YouTube Live. Type a me in the room. How many of you are brand new to our YouTube Live? Type a me in the room. I know that I'm on a delay, I know. But I'm just curious to know how many of you are brand new to the YouTube Live. And if you are, I want to say thank you very much for attending. And for all my regular people, I want to say thank you very much for supporting the YouTube Live. Brand new from Germany. Excellent. Gretlis. Hopefully I said that right. Thank you very much. Thank you, me too. Thank you, Ed. I appreciate that. So I also want to let you know, to help us to grow, when Joey puts these videos out of these segments, because he's going to separate them down, comment on these videos, please. What I like about that is when a non-VectorVest subscriber goes through these videos, with the comments that you put, they get a feel of how you feel about the software. This is where you guys have a voice, and you have a way of being able to take somebody who's curious about VectorVest to at least try it. All right, that comes from you guys. Don't be afraid to comment. Do the best that I can to comment to your comments. So let me know, do you like the videos? Are they helpful? What other things you'd like to see on them? So remember, like, share, and share with people who are in your sphere of influence. Share with people who are also interested in the market. Share these videos with them as well. And what are you doing? Huh? Oh, who else is here? Bari says, second time, I'll be back. Excellent. Chandra says, this is your second time. Jake, which is Brian, says, thanks again, Mr. Glenn. And Robert says, I am new, enjoyed. Excellent. Thank you guys again for being here. Share this, like it, subscribe to the channel. And Joey and I are looking at some point in time, maybe getting a second day of the YouTube Live within a 1 week time period. Something that we are looking at. But thank you guys for supporting it. I want to grow this space. You're going to help me to grow it. But comment on the videos that are out there, especially the Trending Thursday videos. I want to hear what you want to say about them. Go back to the channel, look at those individual videos. If there was one of them that you like more than others, comment on it. All right? I like the way that between Joey and I, are segmenting these videos. So we talk about the stream wars, we talk about earnings, we talk about what's going on in the market. It helps to make things a little bit more concise as we go through the presentation. So with that, folks, adios, arrivederci, ciao, au revoir, sayonara. I'll see many of you on the Jockey Club tomorrow. Later.